Folks, today I want to talk about big profits from the fitness craze ahead. Actually, it's more like the stay at home and the fitness craze all put together. I'll explain. Over the past few weeks, I've been seeing something interesting developing on the mid cap stocks. While I typically monitor my 90-day breakouts vigilantly, I noticed that there's a great majority of stocks failed to trade higher after the S&P 500 peaked out on September 2nd. That's when it made all-time highs. But interestingly enough, and I pointed this out to our VIP program members, that a handful of stocks continue trading higher and making all-time highs as recently as last week when the stock market was just not doing well. The interesting part was the fact that most of the stocks bucking the trend were the original stay-at-home stocks that started the post-February sell-off rally. In case you don't know which stocks I'm talking about, let me give you a clue. It was the same stay-at-home stocks that we've been talking about for months. Peloton, Zoom, Roku, as well as a few others showed remarkable relative strength over the past few weeks. The cause of this is simple. Europe is seeing an uptick in COVID-19 cases, and the original timeline for the vaccine to come out has moved from November to the first quarter of 2021. And that means we may be seeing another round of closures back here in the USA. As the COVID-19 pandemic put a wrench in social gatherings, group fitness classes lost their allure, and most people looked for a new way to stay fit from within the confines of their homes or isolated from other people. And thanks to online demand classes and technology that allows you to work virtually alongside your peers, many find exercising from home to be just as engaging as in-person classes. I know a lot of people who switched to it and they are loving it. Experts also believe that smart home gyms may be here to stay long after the pandemic is over. That and the coming flu season is causing major uptick in stocks related to fitness, and that's the topic I want to focus on today. First stock is Clarus, C-L-A-R-U-S Corp. Ticker symbol CLAR, that's C-L-A-R. They engaged in design, manufacture, and marketing of outdoor equipment, apparel for climbing, mountaineering, backpacking, skiing, and other outdoor recreational activities. They manufacture sportswear. Nice and simple, and sportswear is hot right now. 5-year return, 126% plus. 5-year revenue growth, almost 19%. 5-year earnings growth, over 3,000%. Stocks got four buy recommendations, and relative strength is very, very positive. Expect more upside strength from Clarus in the coming months. Next stock, this should not be a surprise for anyone. I'm not going to be original here, but it's working. Peloton, P-T-O-N, ticker symbol. Peloton Interactive creates fitness products. The brand's content is accessible through its Peloton Bike, Peloton Tread, and Peloton Digital, which provides full slate of fitness offerings anytime, anywhere, thanks to its pandemic success story. Peloton stock has rallied an impressive 240% year to date and has become a go-to investment for many people who are looking to profit from the stay-at-home environment. The fitness giant even crushed estimates in its most recent quarter and reported revenue of $420 million plus, which is a 61% increase from a previous year. This was largely driven by its online subscriptions. Did I say subscriptions? Subscriptions are profitable revenue and product sales. Although Peloton's bikes and subscription plans are definitely on the pricier side, it has not deterred customer commitment to their brand. And the number of accounts on the company's apps grew by a whopping 94% during the year. That's huge. This led to the fitness stock to trend at nearly $100 today, up from $31 in May. 1-year return, 278% plus. Earnings per share growth versus previous quarter, 235%. 4 positive quarters of earning estimate surprises and 20 strong buy recommendations. Price target of $135 per share, making the price of the stock reasonable in light of the potential target. We're still $35 away from that level. Relative strength, it's off the charts, and the stock is outperforming strongly most other stocks on Wall Street, especially during the downturns we've been seeing last few weeks. Overall, I'm looking once again for an uptick in the stay-at-home and fitness stocks, and these two show remarkable tech growth technically and fundamentally. I hope that helps. Folks, I'm really excited about this. Today may be your last chance to see exactly how Jeff Zananeri, former hedge fund trader and Wall Street veteran, is going to help folks make a killing just by placing a simple trade one day, the exact same day, every single month. I hope you're getting excited because we're also going to cover the 2 most powerful trading days of the month, how they could potentially set you up for success on a schedule. The 2 easy to recognize signals that Jeff always looks for before he goes into any trade. Could you be making the common mistake that almost all traders make, that sabotages their trades and profits again, and again? The secret to trading 10 minutes a month to eventually collect massive profits. How about building a massive stack of cash without staring at charts, without trading in and out of positions, and without tons of tedious work? Man, I love how that sounds. Look, you might want to bring a paper and a pencil because Jeff is deep well of knowledge. He's walked the walk. He's been there and done it. And today, you've got the chance to start profiting every single month thanks to his knowledge. Be there today. Click on the red bell in the corner so we can notify you when we go live. Make sure that you're by your computer at around 12 Eastern Time and get into the room early. Thanks so much, and we'll see you soon.